So I want to run through some of the things that, if you're trading multiple currency pairs and you perceive a head and shoulders pattern on the daily charts just as a starting gauge baseline. So the idea of a baseline is, for me, is going to be how many pips is that? And I guess the baseline is how much does it cost me to pull the trigger on a 1K? And if you tell me it's going to be 20 cents, which means commission and spread ends up being 20 cents or 2 cents in a nano account. So people may laugh at a nano account, but the guy that was saying, why are you trading a thousand, I would say, why aren't you trading a nano account? And there's probably about 5 nano brokers out there that you could hook up with, probably actually 20, but and you can really have you could probably have a big sloppy PAM account running, like one of these portfolios, so to speak, where you just don't have that precision. You're not really worried about precision. You're not a scalper. You're not a guy that can make $300 a day or $300 a week or $3,000 a week, whatever that number is. And, we're all capable of these trades, and you may make money and not even know how you made it, say you get a hunch, right? So I think the scariest, I guess the worst baseline is to create a trading system based on luck and chance, and you haven't thought about what's really going on as far as these price swings or these wicks. I think the wicks are the problem. Because if you just put up a line chart, you can see all the head and shoulders and all the peaks and valleys. If you just look at that white line on the screen there, you're looking at the closing prices as taking a snapshot price over time. Literally the momentum in the the cleanest terms. And it's just that. Now, what do you do with that line? You could make money by chasing the market, or you can make money by waiting for the market to come to you. Both trades work. When the market comes to you, you're on the sidelines until the price comes into your price that you decided ahead of time. So if you want to sell high, you are not going to get involved in the trade unless it hits a criteria of exact price. And that is a little different than watching the market when it opens on Sunday night, next window, with your finger on the trigger saying, well, if this thing gap ups, I'm going to start building a sell position at the market, because I can't understand why people get in at the market so big, It just blows my mind. But this is about laziness. The guy that I was trolling yesterday morning, he was like, yeah, I had a losing trade and I'm selling courses, and I just like, but how, you're not even going to put a trade on? And in the background, he's doing this, that, and the other thing. And I don't know. I guess you could. I don't know. I just don't get. So there's an active traders, and there's people that are just mulling around waiting for a setup on the. Like I could say that about this dollar yen trade here on the daily. And, whether I'm right or wrong, and it's going to be about pips. And the reason why my baseline is always going to be, is that a 10 pip head and shoulders, or is that a 100 pip head and shoulders? Because if it's a 100 pip head and shoulders, it's going to cost me more. I got to give the market room on in a 30 pip window. I need a 30 pip window to build a position where I can make 110 pips, right? if the market's going to come down and meet my limit orders, that is a whole different kind of trading. That is literally a if-then statement. If it goes down there, would you buy it? Fuck yes. So there's limits predefined. Now that the expiration on the limit is the big deal. This is where you have control over the risk exposure over time. If your order lasts 1 hour and it's 100 pips deep, you are asking the market to go full retard, spike down there and grab it. Now, if you watch FOMC, if your orders lasted 15 minutes and you kept front running the market by 50 pips, you probably didn't even fill some of those, right? So you got to get the art in it. The art in trading is gauging, well, this thing's still going to scream for about 3 more days. Like, I mean, when you can see the crush on this dollar yen, right? In the middle here, this daily dollar yen, and the thicker line is 100 pip, and everything on the right here is all 10 pips. And I could see that I would need at least a 30 pip stop to trade the daily here. And even if they're stopping me out, you're going to get stopped out. I mean, even with a 50 pip stop. So imagine I had a 100 pip stop, though. I'm risking $10 on a 1K. And in the end, I would be long 20K. Trying to make 200 pips per ticket. I'm trying to make $20 a ticket, risking 10. Is that a good ratio? So you have way bigger, you just have so much more flexibility if you can afford to risk $10 a ticket on a 1K. Because I could build a goober position. So for all the no-nonsense people, you can take without confirmation. Think about it. Think about it, people. Without confirmation, the first, you could just go, you know what? This is the hunch trade. You got to allow yourself to trade on a hunch. I don't think it's the analytical baseline that people are looking for of like, oh, I'm so sophisticated. You don't understand. See, I've studied analytics and I've studied robotics and I put them together in my brain and therefore I'm able to. No, because, you know, if you're a person that pulls the trigger, man, it's one thing to build a robot to carry out your psychotic trade plans, but to do it yourself is a whole nother level, because what if you're too drunk that night and you can't get to the terminal? Or whatever happens, you know, you got some sloppy hooker over your house, you know, whatever's getting in the way. And, right? I mean, real world, first world problems there. But the baseline is going to be, so at the back of my mind, I know I have limits scattered 50 pips apart on the British pound, and they're going to last all week. And I'm like, you know, if they ever take it down there, they fill it, they fill it, they don't. And I got Bitcoin running here live on the 15th because I'm lonely. I have to have the Bitcoin running here. Right now it's 2 o'clock in the morning, Saturday morning. But after that ruckus stream, I have to debrief myself here and just say what I was thinking there. I didn't want to interrupt everybody's stories, and I want to get down to the nitty gritty of the baseline. The thing that always hits me in the face is the idea that for $10 I can put a 100 pip stop on a position, and I could be wrong. I can add to that loser, right? Now, I don't know what is that a lot of money to anybody? $10. I mean, now I know that trading warrior girl, whatever her name is, mindset warrior, she's like, wow, really 19K? Just go 20. Who can do the math on 19? That's not even metric. You're from Europe. What the fuck happened to you? But so this canvassing, right? Canvassing with I got a 20 pip window here. Some guy said, what do you do when the market's dropping like a rape date? Well, you know what you do? This is my favorite like the market's on fire. I recommend the 3K. Now, this is a 20 pip window. I can't drop it now. Market's closed. And I don't have the Bitcoin version of this. But what's going on here is that in a 20 pip window, and this is a 20 pip window, there's a 3K. So at the top, your first K, that's actually every 10 pips because I'm buying the top of a box of a 20. So I'm buying 0, I'm buying 1, and I'm buying 2. 3K. And so I have a 40 pip stop to make 20, which means not a good ratio, right? But higher probability of win. I'm risking $12 in essence to make 6. I don't know if I built the spread into that. I think I did, maybe. I don't know. Some of those are built in, some are not. My math ain't too good, but I can tell you that this is probably almost right. $12 to make 18 if you fill all 3. So I was when the FOMC came out, I sold into that with these tickets, right? And as the market's open, I'm holding these in my hand and I'm dropping this for real money. And I'm holding it like this, and the market's dropping like a whore, or rising like a slut, or dropping like a whore. And like here, this is about to pop. News is about to come out. I got my hand here, and I see it spike up. I start dropping these because I don't have the double clicks written for that. In a perfect world, you got a double click that's just going to put the perfect array, but this is way more precise. I can sit here like this and just drop that. And then walk away. I can drop everything here and say, you know what? It looks like they're going for this. They're going for this. They're going for the high. There we go. I always say they're going for, but it looks like the crowd, like it's just getting pushed right into the abyss, and it just crushes, you know. To front run this, looks like you're getting killed on the daily, but trust me, inside of here, there's amazing pullbacks. You just can't see them. They're hidden. That's a pure view of the market, really. I mean, that's amazing as far as patterns go. And now I'm going to jump topics, I think, but so now I'm going to jump into the charts there. But I was just saying that it's the density of your order. So will people stand in front of the market and sell into this rally without taking into consideration the context of the landscape of everything that's come before? So before this price here, I think a lot of people would have to say, market makers or professional traders that trade reversals or unprofessional traders that trade reversals, this is the 100-yard line. That's 100 pips from here to here. That this vacuum, in my opinion, is the fuel. This hole. That was the pullback. There was a stop hunt. This is like the first chance to get on the train, right? It's actually below the beginning of the month. This is the cleanest, most beautiful. I mean, you know, this is like amazing. And this screaming climax here, wow. I mean, I would have never thought to just put sell limits here. I mean, for a lot of people, they're waiting for, there's maybe even divergence here. This may be just, and it's incredibly overbought. All the range traders are selling here. Now, I suppose the counter trend traders, because the consensus here is that if you use the 20 EMA, you know, do I even have to say moving average? It looks like this, right? And everybody's buying here. And people have sold, you know, courses on, wait, you got to get in here. That's the gold. Yeah, 618 too, buddy. That's not a shabby entry. I got confirmation. In fact, my neighbor's dog confirmed this. He peed right in the chart. Came over to the house. It's crazy. But, you know, and then this is, of course, the ultimate subtle pullback. I don't see anybody selling. And this is what shears people's brains, is this move. 200 pips clean. They're like, holy shit. Yeah, look left, because vacuums leave clues, and there's a big giant vacuum here, right? So this is what's going to kill you if you're a contrarian, because, or if you're a, I don't know what you call it, I guess a contrarian, like you're or a seller, because the what's crushing you in this situation is this so that big void here to the left, and it's just in a pip box. So this 100 pip window, it's just going to be brutal. And it's making up for lost time in a way, you know. And there's nothing you could do about this. This is 100 pips in one day. Then almost 100 pips the next day. Now, this another side of the coin here is that talking about using the $10 stop. If you sold here on this giant move, because in a market order system, my market order system is that if you're up more than 100, if you're up 100 pips, you trade with a 100 pip stop. Okay. If it's up 10, you put in a 10 stop. If it comes back, you make 10. Now, this is kind of the most basic view of trading for people that they're like, well, I'll break even, you know. As long as I'm right 100% of the time, break even's great, because I'm always doubling my money, or I'm always making 100 pips, risking 100 to make 100. And I'm okay with that, because I'm not really, I can't resist marking off the entry here. If there was no spread, we could have bought there. We got sell limits up here pending. But, you know, another thing is, maybe you have this doji breakout system that you built, and this is the only. I'm going to cherry pick that, because I know the robot will only take this trade right here. And on paper, every time the market does that pause, and we can find those if we look real hard. I guess we're going to have to change time frames here to find it. We have to put everybody in the dailies, right? Well, we could hunt down that kind of super doji, or 2 dojis, or 3 dojis in a row, which means more and more indecision is stacking up. More and more so once the market finally moves, it's like the jury's in, right? When the jury's out, when everybody's in, like, well, you're waiting for the news, you know, it's all kind of topsy-turvy here, what's going to happen. And so I guess the retail flush, they call it, the wick. There's either people on the sidelines waiting for the market to calm down, become a doji, and their strategy is to get in there. But what if you used 2 strategies? You got your limits running, you're able to trade at the market, you can look at your tablet and say, or your computer, or the phone doesn't really, Android app, and it's pretty bad. But if you have a Windows tablet, you need a Windows tablet to run MetaTrader, because you can't run, there's no Android scripts, you know. And you look at that, and you get an 11-inch tablet if you're 13-inch now. And unfortunately, it has to be the guy. You can't pick the people that build this shit. So you can't stand on principle and not buy the Windows shit and starve to death. So unfortunately, Windows is the only. It's the power in the way, they say. The power in the way, and this is the martial arts stuff. The power in the way, but the fucking talk. Anyways. So how much is it going to cost you to trade? So let's take a baseline of $10. Let's be really sloppy traders just for the moment, so we can relax and not have to worry about getting stopped out or stop hunted for our early entries. So just on a whim. Now, with this $10 risk idea, and that may be too much, so maybe a 50 pip stop, right? $5 a ticket. And this way, it's like you can afford to make more decisions and not have so much weight on each decision, because this getting your system just right may be too much, right? Because if I just back tested it more, I could trade bigger sizes in there for, fill the blank. So if I was using the daily view, I'm going to change all my charts to the daily, and I'm going to keep this one template running, which is my baseline for my filter of how much the trade's going to cost me. So whether you trade patterns or you're trading just momentum, this market order thing I was talking about, where market's down really hard, and that's a signal in itself. I'm sure you can have an alarm. I had a volatility alarm thing, but the problem is I had them on all the currency pairs, and the thing was I didn't know which one's triggering. And alarms are tough because I don't know which connected to which currency. But I think I could trade this account and make money in a demo mode here with these scripts. I don't think I'd want to trade multiple currency pairs on a real account, on one account, because I'd just be confused. I wouldn't know why I'm making money and why I'm losing moment to moment, because I can have a gauge of how the market flows, and I would be like, yeah, how can I be making, like I look at the chart, I'm like, why is, wait a minute, how can I be up when I'm looking at this position I know that I'm short in? And as soon as I see that, I'm really upset. So I don't know where this money's coming from. I prefer like one credit card or one debit card does this one purpose. All that thing does is pay the phone bill, right? So if I see any weird activity on the account, I'm kind of, these are the kind of little things that come up in trading, because a lot of people talk about the moving average crossover system or the Fibonacci's, and those are all wonderful, but the actual logistics of like, well, how am I going to get in and out of the account, and what happens if I lose my internet connection, and all the logistics of, what if the thing crashes? I see they just updated MetaTrader 4 this morning, so we got a new update. So it'll take a while to boot. I'll have to reboot everything. At least it's an automatic update. It used to be like, you got to update this program. You got the old version. But it's getting better, God bless the Russians on this MT4. They nailed it. But hey, man, it's the survival tool for the non professionals, I suppose. You don't have to be a professional. There's a lot of amateur dancing girls making. They're not movie stars, but they're killing. I don't know if it's legal. Yeah, wear a mask, right? As long as you wear a mask, everything's. But let's go to the daily charts, and I'm going to use my baseline filter here for the pattern picking things. Now, I haven't looked at the pound yen in a while. I know it's pretty brutal, and the spread's not bad actually at 3.2 closing here, considering how many pips this thing can move, which is a lot. Whole bunch of pips. So in the dailies, this has always been a problem for, this is the one thing that was, I couldn't figure out why I was losing so much money one day, and I said, oh, you know what? This thing moves more. This pound yen seems to move more pips than the euro dollar. So on a daily basis, I've just framed everything using MetaTrader's tiles as the ATR. In a sense, wow, look at this thing. This has moved 1,000 pips, This has only moved in the same time this has gone up. And so, same amount of chart shift. And when you save a template, make sure you delete all the objects before you save a template, or you'll embed those into the next. It's funny, when I first did that, I had price levels on the yen, and then all of a sudden I see these objects showing up on the pound because the prices almost coincided. So look at these kind of patterns you see here now. I know the no-nonsense people are all watching me, but, So let's just do trend line. And I always love the way MetaTrader. I used to trade 8 currency pairs. I used to have, well, the 7 majors plus euro to the yen. So, I used to run them out like the time, right? Each market opens. I had New Zealand starting and then Australia. So I had them, like, I was very particular in the beginning. After a while, right? I mean, when you start out, you do things you would never think of doing, like, arrange the towels and beat your wife. No, I mean, you're very particular sometimes in the beginning. Maybe you get older, you just don't give a fuck. I don't know what happened. But you relax a little bit about it. But here, to me, I could stare at this and think to myself, well, I think I might have to run a 300 pip stop on the Guppy daily charts if I fuck up a top or become a bottom there. How much is that costing you, right? So if I were to put my trade plans in place that I talk about all the fucking time, I don't think it's a secret, that I want to buy the wick. I can see the wick over here on this stop hunt is about 100 pip wick. I mean, now realistically, if you're running the trailing buy limit program that I designed and published, and everybody has the free version, is this going up? Now, obviously, it's in an uptrend. I think most people could make this. If you just draw a trend line here, you're like, let's just say it's in an uptrend. That is a trend, right? It's not to say we couldn't counter trend trade it, because I can show you all the counter trend trades. There's a 100 pip winner, 100 pip winner, 100 pip, right? 100 pip, a 200 pip winner, 100. I mean, there's some great scalps, right? Overall, it's going up. But this is the one that's going to, like, if you bought here on confirmation, you're like, well, this trend trading is kicking my ass. Of course, because if you bought everywhere I showed you where you should be shorting, like if you get in super chasing it. So what the guy was saying, the bass player yesterday, he goes, I trade no nonsense. I make money. Yeah, no shit. Because now this may go into a non-trending mode soon, and this is kind of a trend. But you can see how your algorithm here would be a little more, disturbed by these. These are going to cause your crossover. And there's a 100 pip winner here. So you're selling with the 100 pip stop at the market. It's up. Sell the market. Sell the market. Now your friends are telling you, wow, you're selling up there, eh? Woof. Haven't you looked at the trend, buddy? It's in an uptrend. Hello. So who are the people buying on? Well, you're supposed to buy on the pullback. If you're going to do a moving average system, you got to sell here. You got to sell right now. You got to sell here, and you got to sell here, even if it's a losing trade. The robot's going to sell here. You told the robot, if the moving average is down, sell every time you come and pierce it. Right? It buys here. The robot buys here. You told it to. You said every time the thing's going there, just buy there. Now it makes money, though. Well, the robot's right. Maybe the robot's right again. 15-minute chart, by the way. But I'm already out of this trade. Why? Because I bought here and I sold this, right? Because maybe I'm just trying to make, well, this is the spread, so I'm trying to make, barely made any money there, right? Where's it going to trade on the, what's the next trade on the guppy here? So from my standpoint of just canvassing the thing, I got to put buy limits every 50 pips here all next week with a 150 pip stop. I mean, is this not a great trade plan here? Now, when it gets down here, you want to start getting in like heavy duty. So the natural thing, the no-brainer trade, in my opinion, this looks pretty affordable. So this is the I can't believe the dollar Swiss has this much volatility. I don't ever picture the dollar Swiss having this much volatility, but look at this. Look at this beautiful trend. I say trend, but this is short-lived. Isn't this purest run? Same thing here, though. Notice the node dollar versus yen, dollar versus Swiss, they both rip. And so kind of your heads up is that, you know, this, now here's a perfect confirmation. This is the high in closing prices, breaks above, comes back to the high. And people are like, it ain't engulfing. Now, what it's supposed to do for, like it did here, you're supposed to be able to get that trade off. And people say, that ain't happening, right? So you could have traded this wick on Friday. This was that just obvious scalp. And next week, if the British pound starts to invade this 100 pip window, you can exploit that with limits. You know, I mean, you can come in with limits in this whole box. No brainers for scalping, right? Dips in, does all this shit, and all he has to do is stuff like this. You know, this is coming. Now, this was her. If you try to sell into this, this is where people just got killed. And why do they get killed? Because if you look left, you're just gonna blow your mind. This giant vacuum void abyss is just catastrophic. It's beyond. I don't think people really get how deadly these vacuums can be. You can't even see anything to the left, so I can't even really. I gotta zoom in just to kind of. So I kind of fucked up my pip grid there, but the cause was once you got above this lonely wick, it was like, you got to be kidding me. Now we never made it. So this was a critical slot. So this top of this bar was the other, because this is the monthly chart, that makes this such a big deal. And we're above it right now. Right? We're above it now. If you ever made it to this price, would you sell? Of course. You know, this would be a no-brainer. Out in the future, this is going to be an amazing kill zone, whatever you want to call it. There'll be drama up there if you make it up there. So go back to the weekly, and you're like, okay, in the context of what happened there, you broke out. This was the big controversy window, but look at this. It's 150 pip drama on the weeklies. The trade that you could, if you could afford to trade with big stops, you know, you're getting in like this 200 pip crush. But where's the really deep one? There. Right? So you're taking out this and you're getting this nice, even probably an RSI divergence, and that closing prices are just. So, yeah, stack it all up in there. It's obvious, right? Everything comes together in that moment on the weekly. This is the biggest kind of confirmation window you're really ever going to see. You got this top that becomes a bottom on close at the 100-yard line. You got this trend line that is just inconceivably unsustainable. Your first chance to draw a trend line is this top to this top. Do you really think the market is going to keep up that rate of change and keep tanking? I mean, wow. And even after you leave the gate here, you look left to this, you bring this forward. This is the floor you need to stay below. This is the last hope for the bears to create a channel that looks like this. Just going to build a line there. So imagine the channel is here, right? Yeah, I'm not going to be able move that. But the grid's too dense. I can't. Let me just estimate where the other side of the channel would be. This is the channel traders are building this idea, I'm sure. Well, it's going to come down here now, see? Because bottoms become tops, right? But this becomes the controversy, and you bang on it once, and look at that wick. So there is that trap trade you could have got off here, the auction. The weekly charts, by the way. I'm sure ICT is aware of these trades. Right? I mean, who's not buying anything below here on the British pound if we get into this territory? So go to the dailies, and you're like, yeah, I'd see that, but let's be more aggressive. Let's put some orders starting here because this should be an easy scalp window. So go to the 4-hour. Okay, well, you know what? Actually, looking at the 4-hour, I can already see when the market opens. I'm just going to put a buy limit grid in here. I'm going to capture a 20 pip window. And if it comes down here, I'm going to load the fucking wagon. Right? That's because it's a 4-hour chart. And, you know, I could see here that here's a 50 pip head and shoulders. So how much is that pattern in the window, so to speak? I can see, well, if I assume that this is the shoulder that I'm going to sell, here's the head. And I would assume this is the shoulder too. And that it's just going to, we're on a channel that's going to go like this. But it's okay. I can make that mistake now, right? I'm using a 50 pip stop. So I sell here. And so I sell there, I sell there, I sell there. And I don't sell on the way down. And I sell here maybe. It's not bad. It's not a bad trade. And I'm not going to get stopped out of that. Of course, you know, I got to buy back here, right? Here's where the buyer's going to come in for the scalp. I also got to buy back here, right? Because this is the other monster vac that everybody's going to buy. At least for a scalp to here. But it looks like we got a bonus to her. And of course, above here becomes the seller window all over again. So you can see the trade coming, right? We're going to sell above here. We buy below here. The market coming to us, lifestyle. The other way is that on the 4-hour chart here, you just bought here at the close, right? You bought here because you don't want to miss out on this move. And that's not, you can afford to do that if you have small tickets for the market to satisfy that need, because you are going to miss out. That's why you have a fear of missing out, because you have a fear of getting killed because you could get killed. So what's wrong, right? Don't deny the fear. Don't say I'm not afraid of missing out. Well, I guess it doesn't have to be a fear, but how about the joy of not missing out? I don't know. Why does everything have to be a negative type of setup to it? But that's just how things are, you know. I guess we can't choose how these things came about. Anyways, let me go back to my normal. So I have this favorite, I guess, baseline for framing the market. And everybody has their own, I'm sure. But I have this feeling like I want it to look a certain way. And actually, the old computers had really crude graphics. This is so high res. It's hard to get the clunky, boxy look I want on a MetaTrader where I can see, oh, you know what? This is a bar. There's no, I actually want it to be pixelated and squared off. But we just suffer these high res monitors here. Actually, this one's not that high res. But it's better to have the portrait mode almost on some of these charts. Very vertical trading. But if I zoom out one level, this is my classic view where the bar is that thick, the grid's like that, And I can picture 100 pip trades, because I can see what 100 pips looks like. And I can kind of plan these out. So if I want to trade the pound, I know that I got to have 3 times the stop. If I put everybody on the 4-hour time frame, because I can't afford to trade the guppy, it has to. And I bring everything to a baseline like this, and I would look, if I was looking for patterns in the 4-hour, I'd have to scrunch it down so everybody's matchy as far as volatility, and trade plans and Head and Shoulders. How much is the Head and Shoulders going to cost you? So here's the 4-hour view. Now this is going to be a lot more money for people than the daily charts, right? Because we can see how we can make 20, 30, 40 pips from dumb shit wick trades. So the 4-hour is a whole different world. So everybody's in the 4-hour now. And now to me, it looks like, okay, we could probably do about 3 trades. We could be at least 2 trades per currency. 2 or 3 amazing trades per currency per week. So if you're going to make 40 pips with a 20 pip stop, you're going to make 60 pips with a 30 pip stop. All these scripts are here, or you could just change the stops. You just rewrite them. Just open them up. It's obvious. It says right there, stop. So if I'm looking for the proper fit, so I'm actually going to curve fit it in advance to the market. And, the noise is tradable. So right here, like you're looking at this and you just kind of say, well, if I had to trade based on only this much info, I'm not allowed to zoom in and see the big picture, right? Because this shit on the left has nothing to do with making pips for me. Now, there will be people that will want to take in more and more data, keep zooming out and saying, well, what's the big picture? I can't even think about it, because if I'm on the 4-hour chart, what's the next 2 bars going to do? That's going to be, how about the next 4 bars to come? What could they possibly look like? Where could we possibly go price-wise? I mean, you'd really have to think about, if the bulls push it up, how far are they going to push it up? If the bears push it down, how far can they push it down? Those things are going to be the most critical things next week to making money. If you want to make money trading, that's all I'm going to add. The Tom Vu trading course. Okay, first you're going to need a girl on your lap and the proper stop on your script. This is just how it's going to be. And I got a warning. Okay, that was something. So I compiled something with a warning. I was like, it's a thing I'm running here actually, but it's all right. We'll make it. And so I used to be really into, when I first came up with this idea of, well, how many pips is that pattern? Then I had these locked and the scales fixed, and I would queue them all up, right? I had 8 currency panels up, and I had so that the ask and the bid and ask, or, the current price is right dead center of this chart. And I'd queue them all up, and I'd see, well, what happens after, 24 hours goes by, and some of these currencies are just off the chart. I mean, they just went into, because I'd fixed the scale too, and had them all queued just perfectly like this to make sure they all were calibrated to each other. But this has been a lifesaver for me, because I literally would trade patterns like this, not realizing that that is a 120 pip move. Like I would just look at that move and go, wow, that's what a great market to trade that. That currency really moves. Yeah, no shit. So I'm trying to get these guys pip for pip here. So I put the 100 in there just to remind me what 100 pips looks like. So starting from this baseline of, well, let's take a look at these markets on the 4-hour basis. Can I see any trades to come? Yeah. The easy trades are always going to be for me that I'm just going to buy without question all next week. I think I might have just crashed this platform. Wait. No, not yet. I always make sure you if you get a template you like or a profile, save it before you crash it. So I'll always love to buy down here, the buy low program. I'm always going to want to buy down here. This is the hot property. This is the untapped real estate. This is the bohemians move in there first, and then the artists move in first, and then here comes the commercial interests, and then it's all over. Right? Now the pound yen, trade wide, trade deep, buy below that wick. This is we could sell into this pocket. I don't think it's going to be that ripping yet, So the danger in buying these pockets, it's not enough to mark off this area. Now you got to come in and say, all right, we're going to buy here, but we're going to have to zoom out now. If you're going to put in deeper orders, so here's where you have to look at this shelf. Because having that, and people will look at the charts on small time frames and kind of trick themselves thinking, oh, look, it's just dropping a little bit. No, dude, it's on its way to hell, and it's taking. And if you have too wide a stop, even with a 100 pip stop, you're going to be like, yeah, but I only risk yeah, dude, you just lost $100 because they took out a 10K, and it's $100 on a 10K, but not all. So maybe you only lose $50, right? Because they stop hunted some. You still retain some of the position. The tight stop traders are going to be heartbroken because you cannot survive too much. If you still retain 20% of your position, somebody said, what happens if, amazingly, if you traded with 50 pips, 100 pips, 20 pips, 10 pip stops, they're going to shear off your 10 pip stops. They can't touch your 200 pip stops, your 20 pip tickets. They can't touch it. It's like when you go to the slot machines and you're on the dollar machine, you're going to make $1,000 at some point because you're putting a fucking buck in there. I'm sorry. This is true. Like you're trading big, like there's Tom Vu. He's killing it because he's fucking, he's like, yeah, I got this. Tom Vu, you're born to lose or you're just trying to lose. What I find astounding is that somebody's going to put a sell limit up in this 10 pip, in this like 2 pip window here and just go, yeah, we're just going to sell up there. That's resistance. that's a double top. I'm going to sell when it gets up there. I would say I'm probably going to take the heat and I'm going to get in early though. Because, see, I'd rather canvas and start selling in this 20 pip window and being like, oh, yeah, yep, that's going to be a good trade. And, of course, this took a while to get paid here, but, man, look at that. And would you have thought that? So the first exit for a lot of people, I think, was going to be this. And the buyers are supposed to come in here, but And then, of course, all the way back to the starting gate, actually overshoots this. A big controversy here, but we just, so I'm staying in this swing trade long, And if we get above here, I'm getting out, right? But next week, by the same token, I'm going to start selling here. So I don't have any, so even if we do go up in an amazing move, where it's like consolidate, just go nuts. It doesn't matter because inside here, there's going to be plenty of pullback fun, just like this move. Everybody thinks this trend line's holding. We're in this channel. It's going to be wonderful. No, I'm sorry. No, it's not going to happen. and it just falls apart. And you could have even sold into this for that, that little, it's a 4-hour chart now. So the 4-hour chart makes more money because you can see lonely wicks. You can see all this supply up here. It is a white knuckle ride for you. It's going against you by 40 pips before you make your 80 pips, I'm presupposing you rode that whole move. Here's another amazing, glorious entry. And here you probably could have, I don't know, maybe some people aren't going to want to buy into that smash down, but if you've already planned to buy there or even sell here, so you're really looking for these places to sell. And here's where people can't take this trade very well, is when it does this. This is the same time the pound was shearing up. Because this blow off top is going into I think a 3-month high back. If you look back here, but look at the backlash from this. Now you would think that after this we would mull around a little bit. I mean, I would, but no. I'm sorry. It's a complete pump and dump. It comes ripping back. It just pays no mind to this, to this, to this. It just carves this shit out. Yeah, it does become the buying window for, right, the 100 pip window buyers, the swing traders make 100 pips on that, right? Comes into the limit grids, you're martingaling in, and where's your biggest ticket going to be? Every time it's going to be where people lose their mind. And everybody's bearish as can be. It's always going to be right there. You put your biggest tickets here. And you also had to wait. If you're going to wait for the market to come to you, you got buy limits here. That was a good trade. You scalped. Buy limits here. That's not the greatest trade, but you still made 20 pips, because you got a lot of big fat tickets here. Big fat tickets here. That's why you get this wick action. And then big, just super big tickets here, right? When everybody's like, yeah, look at this trend. I know this is a trend. That is true. This is a trend. And so is this, right? But is this the trend? What do you call this? I call it a 100 pip auction, complete short squeeze, because it's fueled by this. That's what I'm seeing. I'm seeing this here is the fuel. This window above here. When this fills, that's the fuel for that move. And you're crushing in. And the fuel here is you made a new low for the week. You're trapped under the weekly. Mind-blowing, right? So waiting for there's so many ways to make money here. I was saying earlier is, you could have market orders running in conjunction with limits. So you're scaling in on limits, and you see every 4 hours it's down. You're like, I'm buying. Don't buy this one. It's down big. Well, buy big, and I don't mean size. When I say buy big, I mean put in a big stop. You're risking more money with the wider stop. So it's a bigger position, right? It's a bigger risk to you. If you buy with a 10 pip stop at 1K, I get it. It's silly. So I trade with 1Ks because you can command a larger window. You can say, I don't give a fuck. I was trading with 50 pip stops. When the market was screaming up at FOMC, I was like, oh yeah, couple 50 pip stoppers in there. Now, that can get out of, if you go in at 100K, that's $500. You're getting in kind of, you can't just do it at one price. You gotta. And then I thought, well, why am I being such a slave to the market? Why don't you just throw a fucking limit grid up there and just walk away? And I did. So I traded the news like that. I could trade the news like that, and I do it because, like, this is a news event here. This just happened. I had sell limits above here, above here, above here. These didn't fill. Had to scalp those for the 20 pips I could get out of it. I was on the 15. I try to stay away from the 15-minute chart during these events because it basically is like this. I mean, are you really going to trade every zigzag? So you kind of have to wait. This crush, I'm going to lose a couple tickets on here. I'm going to lose my 20 pip stops. I'm going to lose my 10 pip stops. And I have the 20 to make 10s. I got risk 30 to make 20s in there. So you can see that the probability of this guy with a 30 pip stop, a 40 pip stop to make 20, the grid that I place here is almost going to get stopped out, but it's going to make its 20. Now 40 to make 40, I'm laying, so the news burst out, I have dynamic risk available. I come over, I grab a 40 pip stop, 40 to make 40. I lay him in, I walk away and I go, you know what, dude? The news, and we could see the accumulation on the floor. This is before FOMC. It rips. And it's just a foregone conclusion. It's going to trip into this window and out. And it actually even makes more money than the people that are typically just going to scalp that 50 pip. It just crushes all the way back. Amazing. And I was buying into this for that dead cat bounce, and then one more dip down, and then just couldn't get people to put in limits down here. I said, tell people, buy at the market, buy on limits, and that trade's over for now. Sure, we could keep tanking into next week. We could come down and do this stuff. But I'm just going to, I say if we drift to here, I cash out. I know there's resistance here. I reload on limits to sell, limits to buy. So I like to go flat. The market does its thing. Come back in with the same trade plan. Sell limits above, buy limits below. See where the market's doing. I could still trade the market though. I haven't left that off so my approach is limits first because you're planning logical trades based on price, vertical price. It's not momentum price over time. This is pure level, 19 trading. And then we still have the narrative of like when London opens, are we going to be probing those wicks? Are we going to be hitting some limits and getting filled on some stuff? So baby steps, I suppose, if you've never traded on limits or never thought about set it and forget it trading, I think they call it. It's called a lot of things. We have a lot of different ways to describe all these things we come up with. But in the end, and of course there's the buy stop, right? Let's not forget the Goober retail classic confirmation. Nothing wrong with it, right? Buy stop, right? The old buy stop. Let's put a nice gentle buy stop in. Don't have to be so angry. Why so angry? God. What happened to you? Some guy came on the stream yesterday. Why do you have to be so rude? Why aren't you more rude? You're making me lonely now. Now I'm offended. So the 10 pip window. And of course, if you go with the buy stop entry, you're supposed to put your sell stop here or something, so nobody can get at it. Yeah, right. You mean when you put your stop here, nobody will get my stop down here. I'm going to go long right here. Joe said to buy. He got a signal from the service. I'm long. I put my stop down here. Oh, fuck. I lost 10 pips. I was up 80. Oh, shit. Oh, well, Joe, you better get a new signal service. I feel like I'm getting whipsawed. So we got a hammer on this 4 hour. A little drift up. I think the size matters. Of course, there's a multitude of ways you could have traded this move. You could have either got in before the news. You could have sold into the top of that. As I said, there's so many ways to make money from anything that's going on here. Obviously, I'm going to have buy. If I wasn't in this market, I could come in, when I come into Sunday, put buy limits here all the way to Memphis. Pick a window and sell limits above here. Because if we fill that void, so we have to have some type of plan. So a guy was asking me in the stream yesterday about, well, how you gauge the void, and do you just, I would say take the scalp. So I talked about this order block situation. To me, this is an order block, a rooftop block. This sloping thing, this supply zone is very intense because it's this stair step. And this is the lonely wick in a 10 pip window. So when you shear up like this, you see how people made money from that? They sold into it and then they cashed out back. The trade's over. The 4 hour shows you, you can see the whole trade right in there. That the concept of selling here, sell a 1K, a 2K, 3K, 4K, the 4K, cash them all out into, this is just a simple basket trap of you lay your orders in. So by the same token, you could have done this other trade, which would be very aggressive, is to say, well, I'm just going to buy on limits, just like you just said there. You're going to lose a little bit here, but you're going to make some good money in the end. You'll see. Watch. So you know the breakout traders, they do a cancel replace. They put a sell stop here. Then they move it up. And let's just ignore the fact that you should be selling into that. But the Goober sell stop confirmation guy, he's going to make money on this trade, actually. It breaks out. He's winning all the time. He should be aware of this exit point, right? Once you clip these wicks, it's probably going to reverse. But if you are really aggressive, and you're going to go against this guy, but you're going to make money also, where he puts his entry to short, you're buying. Now, for the beginning of this move, you're both going to be, I'm going to be wrong if I buy on a limit. He's going to be right, but there's going to be a threshold when he becomes wrong and I start to become right. And it's going to overlap. And the tide's going to turn on a 10 pip grid of him, he's scaling out, I'm scaling in, and we're both making money. As he hands the trade off to me, so to speak, imagine there's just two traders trading these markets. There's a bull and a bear. And he's like, well, I'm done abusing the market. It's your turn. I guess I'm order flow. So we should both be making money. I should agree with your trade. Yeah, it's in an uptrend. I'm just counter trend trading. I mean, I'm making 100 pips when they're done, because it's too late for me to join the trend. What do? I mean, I'm not going to sit on the sidelines every day. Can I accept that there is this vacuum that still needs to be filled and it's not too late to sell into that? Of course. I think it's more comfortable maybe to sell a rally on the 1 hour than to wait for a rally on the 4 hour. You may never get it. So the 4 hour chart, if you've, like I say, 2 or 3 good trades per currency, making 50 pips should be, well, depending on the currency, but making money, right? Because these setups, the guy that's from Georgia, the guy, in the mountains there, this shouldn't be that hard. You just have to take, you just got to put the orders in. Now, if you don't want to babysit it, just make the orders last all day. You don't want to come back and refresh a 4 hour grid. The only reason you would do that is because you don't want to overexpose your account. the more aggressive you trade, the shorter the expiration needs to be on the scripts, because you're putting in, say, you put 500K in the market. Well, in about an hour, 100K is going to delete itself, but you got 500K pending. And then by the end of the day, by the time Europe opens, you got 20K pending of really wide-based orders that can take any amount of punishment, right? You'd be surprised. We opened up this platform once, me and my tequila buddy, back almost 10 years ago. We had a demo account, and we went into a trade on the dollar CAD without any stop. And I said to him, I called him 3 years later, and I said, that account is still open? I logged into the demo, it's still there. I said, we're up like fucking $3,000 on like a 10K or something. And I was like, I said, neither of us have the patience to wait 3 years to make that much from that little. So since I know that about myself, I'm not about to try to do that trade. You could tell me all day about Bitcoin's going to 200 grand. If it takes 10 years to get there, I don't care, man. I don't. It just doesn't. Those kind of discussions are just, it's like a Lifetime movie kind of thing, the bad currency, the wrong currency. It just doesn't, I can't even imagine that even being like, okay, great, but then what? And you were in that trade for how long? But I guess it's so funny. We're not buy and hold people, apparently. So it really is funny. But yeah, so next week is a very kind of a normal beginning of the week. We're going to see all kinds of prices here coming up. We could probe either way. We could, but it's really, this would be some feat to make it in this window. If we make it in that 100 pip window, there will be a big controversy. And you can make money from all this bull and bears fighting over the price, and you've got your orders in there. Here's the dollar yen. Obviously, I'm going to sell above here. Right, that's the obvious place to put sell limits. And below here. Now this could get kind of vicious. I suppose this is the looming vacuum. That's the only reason I would look at this chart. But this, so like I said, this doesn't matter to me right now, because it's going to take it's not going to go like this. And since we've covered this area, this is a recent price. So looking left, this was the big fill. And look how you got through that. The way that it was able to etch into that vacuum is, there's some great counter trend trades in that, right? So even if you were doing just clunky, this is like range trading at an angle, you're still making some good money, especially that pullback there. Well, that's vicious counter move. Yeah, you're making money if you hold this trend, but that's a grueling move, that's just, wow. I don't have the patience for that. I kind of like this thing. It's slam down, rip back, you're out. Maybe hold that gust, but then I'm just, most of the market seems to be this shit. If you notice, this is a gold mine. In my opinion, this is easier to trade, right? Buy, sell, just bullshit. Keeps invading wicks, and but this is a matter of taste. There's no one way to do it, because you may prefer to put in the buy limits here. You pick this trade up, you sell limits here, buy limits, sell limits, buy limits, sell limits. And you just have to get in front of the market, or sell at the market, buy at the market, buy at the market, sell at the market. Now, not every trade's a perfect winner, but you at least you got this, once you take this out, wow, that is the biggest winner there. But then we get this, so you're actually trade during the triangle formation, and you get nice triangles on dollar yen for some reason. Well, a lot of markets actually, but these are like just classics. Then you get that punch out, right? And you kind of got to get out of that trade there, because otherwise you're going to tie up all that margin and all this bullshit. And then finally, the seller's window. Nice trade if you held to here. Again, easy, insane. And all these, what do they call them, rejections? They're all selling opportunities. This will be the next abyss. I'm not too worried about this down here, but yeah, poking around here, we can make, if you're going to trade all these currency pairs at once, which is going to be quite a challenge, but not so much. If you just stay, another thing's got to be organized, I guess. So they're telling me that, so having this view, you got 5 pairs to trade in the 4-hour chart. You got showing about 200 pips per chart. We should be able to get a trade going here, right? That's approximately 200 pips per chart there. Maybe a little more over here. Kind of at the mercy of, it looks like, this one, if I expand this guy, because this one I can still stretch out a little bit. So these two are big movers, and it's going to cost me some money. But this is obvious that I'm just going to stream buy limits down there. Simply, that's what's going to happen. And as I see them fill or don't fill, then I'll make the judgment whether I'm going to pull the trigger at the market and say it's okay. It's 1 o'clock in the morning. It's down to X. Let's get in, So that's just what I was thinking about this baseline idea is figure out how many pips this pattern's going to be. These are all this head and shoulders nonsense here is like, you can make all these claims, but how much is it going to cost you to really put that trade on, right? You sell. Here you can run probably a 40 pip stop. Apparently you can get away with a tightish stop. You don't need a 100 pip stop. You don't need to stop it. You sold here with a stop here to make this much. I guess, right? So that, you got your $2 stops, your 20 pip stops. Maybe that's going to be, you can do that all day long to make 40, Here, that trade plan's going to be more like, well, we can buy this trap. You always do want to double check, though. Looking left. If this happens to be a really old price, like a deep void, so you want to be careful. Take a look over here, because this is a deep void, And if we should ever breach into this, you'll have to be prepared for, I guess, be prepared for a lot of stuff, really. So thinking in probabilities of, possibilities of, what if we came down here, Well, is it really how fast you're going to get here? Here's where you want to have an expiration time that's shorter. So when you stretch these boxes to the right, if you're going to play a low-risk game, this order is going to last, say, 12 hours or 8 hours or 6 hours. And this up here may last longer, or you can pick the same time frame. The chance of filling this, if it lasts all week, it looks like this. I mean, you're probably going to fill that. A 1 week expiration. So your exposure for the 1 hour trades kind of be like, okay. But if you put an order down here that lasts all day, and maybe So would you put an order down here that lasts all week? Why bother? You got all next week to. So there's the best way to look at it is just front run the market with these limits. Just come in with limits. And as it's dropping, just put limits in front. This way, instead of putting buy stops above, so if it starts to go back up, you kind of just. I just think this is the way to trade, because I'm saying I want to buy low, and I kind of just like a bullfighter, I suppose, keep moving this red blankie in front and just come on, fill me. Then I see they do pound that wick, and they do scoop out this supply zone. That's going to be a chunk of money. And that could happen this week. And that's the pound yen. You're going to need some money for that trade. Whereas the pound of the dollar, this is pretty tame. Are these not obvious trades now when you look at this thing? Does anybody have any questions? I mean, come on, man. Who's not selling in this window? And who's not buying below that wick? Right? Those are obviously key price areas. So where's the problem? What's all the controversy? Why all the MACDs? So that is the big, giant gap. The no-nonsense indicator world and the moneymakers, supply and demand. Those are the two opposite worlds. I've even put in orders like this, and I probably would do this actually on a 1 hour, 2 hour basis, is that whether I don't have a bullish or bearish thing as far as that goes. Let's just sell here. Coming into Sunday night, put sell limits up there, but once again, always putting in the longer lasting tickets here. I give it plenty of time to weasel back up. And what's the trade? Well, we know that's the floor. We either go long here, Sunday, we build a position to here, cash out, or don't cash out, let it rip into here, or let it rip into here and sell into here. So I'm doing that also. So you could be both people, right? So you can, this is not like the real world, like, the road less traveled. I wish I could travel both paths and be one traveler. Well, you can here, because you can literally hedge into that. You're long, but you're going to gradually go short. You're going to hand it off to your short side. That's a great short there. But now we're in this 200 pip malaise. I'm sure there's a guy with a buy stop here and a sell stop here waiting to get picked up in confirmation and get a hand of forex move out of that. But yeah, this is too much fun, don't you think, trading? It's certainly challenging, but without these order drops in this, some kind of containment as far as, well, how much is it going to cost me for these trades? Well, our course starts at $2,000 a minute. I mean, this thing, well, that's like one trade. That's one losing trade. You better take the course, I guess. So you might as well. You got to take a course, even if it's a bad course, I guess, to ask yourself, am I willing to adopt this guy's way of trading? And the argument is that since you paid for the course, you're more likely to follow the recommended daily dosage, the food pyramid, right? So I was listening to Indian doctor talk about how they look at the whole body, where in the States we have the specialist view. It's the same thing in trading. I think you're the specialist. I specialize it. And everybody has that, right? So that's the blind spot. We have the specialist view as opposed to the whole giant view and a relaxed approach. Not so uptight, not so scientific, not so Fibonacci. Yeah, I know the Fibonacci's. I mean, people say, yeah, look at that pullback. Okay, there's a little bit of, sure, we're all buying low. It's just an excuse to buy low. And it's really hard to hold on for some Fibonacci target when you have to realize they're going to retest it. Sure, in the end, we may make it to that target. But what if they pull it back one more time? And I say they, this, it is quite a mess. But once you accept the mess, man, there's so much money in here, Now, not every trade is going to be the 100 pip or 50 pip winner, but you have to be okay having customers that can't afford to buy the big ticket items, So trading's supposed to be a business. So if you treat it like a business, your customers are these, I suppose, the retail traders you're taking money away from. That's what they say, is that the big fish are eating the little fish. But, you don't have to even get in the pool. So you can be on the sidelines. You can trade a demo. You don't have to trade either. But, it seems like a way to make money that doesn't involve people. Not that there's anything wrong with people, but let's face it, it's a lot of work. And, because if you have a relationship with somebody, you kind of have to, well, I guess it can be fun. It's not all relationships are bad, but there's a responsibility and you have to have attention, and it's work, it can wear you out. And the market is a living thing that doesn't know that you're looking at it and trying to jump in to the market and kind of ride the bull and ride it for 8 seconds and make some money, get out. So it's definitely challenging there. And I guess you could go down the moving average crossover highway and lose your mind that way. But when you see the feebleness of these systems, you just have to wait for the crossover, see, and it makes it okay to be a trader now. It just gives you the okay to put on a trade, and then you're like a subway car to hell, and you're like, yeah, but the food's really good on the subway car, and look at the observatory. You're just dazzled by the interior decorations. Meanwhile, things going to hell. Amazing denial of reality, that guy. And I've seen that guy before, where if you order now, it's going to be half off. And it seems like the infomercial world, it's all driven by that. People love that. But you can get rich quick, and this stuff really does happen. Tom Vu's very honest. Yeah, my friends say you can't. We are going to get rich quick. By the way, yeah, you can also go poor quick, right? Especially you buy the too big a house, Tom Vu. The bikini prices go up. I hate when that happens. Inflation, bikini inflation. Now that's a buzzkill right there. But hey, Victoria's Secret, are they still in business? Oh, they got the big models now. Zoftig. Oi, not the big ones. Heifers. Come here, honey. Let me show you something. Anyways, that's we're getting ready for tomorrow. Keyed up for the opening of the markets. Yeah, it'll be crazy. So anyways, I'm going to go back, take a nap. I just thought I'd do a recap of the pip risk and why you don't need to trade so big, I suppose. Trust me, you can get into 300K real quick on 1Ks if you press a button. Actually, you could buy it. Another idea is if you want to put a 10K on at the market, yeah, buy a 10K, write a script that has different stops and different exits. And I actually had a buy stop script that I ran at this one broker because I had a tight spread, and I thought, well, I'll just fucking put a buy stop like 1 pip above. So this is when the market's dropping fast. And then I just kept hitting that button, and it stacked in there was a 10K on 1Ks that actually had a, believe it or not, like 1 pip away, 2 pip away, 3 pip away. And the 3 pip away was a swing trade, maybe going to make 20 pips with a 10 pip stop. And of course, the one that's going to get it 1 pip away is going to make 8 pips with a 5 pip stop. Now, under the right conditions, the right momentum, market's dropping, fast drop, news is out. Hit the button on that. These are 15-minute expirations. The market starts to reverse. Holy shit, you're in like 180K. It's screaming back. You're cashed out. You're like, dude, it's the cleanest breakout for that one. But this was done with a hotkey keyboard. I knew the script was loaded on that one macro key, and I just kept hitting it. And this is a big news event, and it's all designed for that purpose, Now, that wouldn't have worked on limits, because if I was front running with limits, I'm going to overfill the account. It wouldn't have worked at the market because I'm just going to get pounded. But yes, I always say don't trade on stops, but you don't trade everything on stops. Don't trade everything at the market. Don't trade everything on limits. You just can't survive it like that. Limits have their purpose. They're amazing. And like I said, I wouldn't use the stops unless it was a news event. On a fast market, I would use the stops because if it's a slow dripping market, then it's probably going to fill my limits, and I can gauge that this is not going to be a violent move. Like, look at this chart here. Most of this stuff, except for the extreme backlash from that left side of the chart, most of this stuff is run-of-the-mill. Yeah, it runs, and then it dies, and it runs, and it dies. And then there are some wicks, and we know that there's pent-up demand in the vacuums. You can see how they just rifled through it here. If you just look at this chart, just stare at it, and see how quickly, in less than 2 to 4, 8 hours, 16 hours, this market can turn on a dime, go the other way. To put a 20 EMA on this chart is silly, in my opinion. You're only going to get about 2 trades out of this thing with some moving average rules. That's why I'm just highly against. Not that you can't make money with the no-nonsense algorithms, because I can see the trades that you're going to pick up here. But it's a gold mine if you don't mind working a little harder on just looking for the obvious setups that are, the setup's already here. The setup's always here because we see the void above, and we see the voids that are the nearest to the market, right? That's the most critical void. I hope this, I'm not the best teacher. Yeah, I watched this movie yesterday. I can't remember if I'm talking about a real movie or real about it. So yeah, this lonely wick idea, right? This is a constant theme. This fractal. Man, those are profound places that we're going to see a reversal. And this is the one. This is the bone crusher. Rifles down. Wow. And you may have missed that. Because, and if you had you got to be able to see this basement. That's where you have your fattest tickets. Not that I'm not buying on the way to that. And actually, for me, I'm buying here. Buy. I'm very aggressive. Buy at the market. This is a bullshit move. This is unsustainable. This is the pocket. Rip. 100 pips. I'm out. Buy limits here again. Sell limits here. Now this is a white knuckler. That is a big fucking win. Why is this not? Why isn't the people trading like this? Because they have too many filters. I'm waiting for the engulf pattern. I'm waiting for my mom to stop kicking the dog. You're waiting for so much shit to happen. That's the only reason I get lit up, Yeah, man, if you're making money from Rainco and you're married to a hot chick and she hasn't cheated on you yet, that's wonderful. I've never had things go proper in my life, so my view is everything's a fucking mess. Everything's a train wreck. You got to sell limit up there. Man, you're a fucking great trader. You put sell limits up here? You sell new highs? And of course, in my case, I'm probably selling this. This whole thing I'm selling. Because I can scalp to here. So the guy said, well, where do you scalp? You got to scalp to here. You got to scalp that wick. Whether you get this move out of it? Wow. Now, you could get on the 1 hour train and sell the wicks, right? These kind of wicks on the 1 hour train, like this one here. So the trailing, people have the trailing protection. Here's an opportunity to run a trailing sell limit and pick this trade up. Here's the only place you're going to get in. Trailing sell limit. And then last price pulse into this. But the big problem is this may be a great buying opportunity, but that is a 60 pip window. Don't forget, you got a grid in here with 40, 60 pip stops. You're going to make your 40 to 60 pips here to the floor. This is accumulation under the floor. This is an intense situation. You can make money here. And you can build them. You can just make money in here. You don't even have to ride this thing. So I'm going to kind of clean up the data here a little bit. So by going over this, I'm going to cancel out the prices that are, so I can just kind of key into the kind of do my own smoothing of data here. So I'm just going to make this one big price pulse. This is one big swing high, swing low kind of thing. All right, so what appears to me is like I see this void. It's almost like the market just keeps backfilling. Fills that void, fills this void. And these voids have different sizes, The bigger the void, the bigger the cause and effect relationship, right? This big void. This is what just blows my mind about these markets is that it's almost like for me, this is itching to get filled. Like this is the vapor left behind. Sure, that's the actual price here that's just screaming north. But it leaves behind that. And it almost becomes a Gartley if you look at it just right. So to me, the Gartley's that void there. And of course, this void doesn't get filled. So this is never, to this for the moment right now, this void here is left uncharted. And of course, it looks like we're going to have to go probe this now. I don't know. It doesn't have to. I don't care because I'll sell here again. And that's the rinse and repeat idea, because the same thing happened here, right? When people sold here again. So they sold this move, they sold this move, they sold that rally, they sold that. So why would you discriminate? A rally's a rally's a rally. If I buy a sell-off, I buy a sell-off. What's the big deal? Now they all have different character, and they all have their dead cat bounces in there, you know. But I'm willing to trade that on hand placed grids. Now I talk about the robot. I would like to turn on a robot for this that's going to drop a complex array. If I put static grids in here by hand, it's completely different than a robot, than several robots dropping really ridiculous trade plans. Like every hour it drops a 1 hour array of like 30K, like a high risk thing that if I'm sleeping and the news comes out, or I don't wake up in time, and the market should wick down in there. I mean, to me, that would be kind of cool. I think I could trust that template. I would call it a 30-minute 50 pip buy bot, and I would know this it's a buy only bot. It's gonna run a 10K 5 pips apart. Every half hour, it's going to drop an array that lasts for 15 minutes or something. Now, certainly, I don't have to back test this. I know what it's going to do. It's going to do what I would do. And that's an option. Or do I just do it myself? At what point is it even worth trying to build a robot? I don't think it is for me, but now, and of course the time and the hardware, and you know, would you have a robot play guitar for you or bass? Is the execution better? I just saw this band called Rumors. It's a Fleetwood Mac cover band. God, they're playing the best fucking audio I've ever heard. Just premium audio and tight as fuck. Better than Fleetwood Mac, actually. And or you're just gonna and that's humans are doing that. But I'm sure that's coming a day. There's going to be a cover bot that you could just it'll just play your favorite song, you know, synthetically, high end, perfectly maybe. Well, the markets are still an organic train wreck, you know. So the markets is always going to befuddle people who build fragile, non-robust algorithms that can't stand up to pure chaos. And the market's nature is not to be curve fitted, you know, in any way. I mean, the future's unwritten. We don't know what's to come. And it has a random the momentum's random. In other words, we may get to a certain price, but how do we get there? Kind of a messy ride to the target, you know. To make it to the 100 pip yard line here. So if you're going to buy at the 100 and dump at the 100, it's like a fucking, you know, you come to the 100, pull back 50, you know, 618, pull back, whatever. It's always this kind of choppy thing. And this takes almost a week to make this 200 pips, by the way. A no-nonsense trader probably might even got triggered here because, you know, this is 4-hour chart in the dailies. You might have had a nice close down. Of course, for these guys, they probably sell into this thing. Gotta be careful there. But this is a hell of an accumulation phase, and this actually takes a lot of patience. I think it's okay to make 8 to 28 to 68 pips to 13 pips. 22 pips, having this broad diversification and scaling out. Because you're always taking something out of the market. You're always making money. I hate waiting to get paid on some. The people that trade the signal service stuff, right? Some guy says, "Well, buy the pound," and so you buy it around here somewhere in a 40 pip range, right? And you make your money, right? Man, that is tough, right? Because you're just, I gotta wait, and I gotta stop down here. Now the 100 pip stop. If I bought here with a 100 pip stop, yeah, I can make 100 pips there. Yeah, 150 actually. I can put my stops in here, and you can be a real slob with a wide stop with a small ticket. And this is going to make it easier to accept that it's okay to incrementally develop a position that could be very large, actually. It's okay to scalp the 20K around the 100K. Well, I'm just speaking for myself. Because this all or nothing thing has just made it so difficult to... I mean, you could be in a trade where you're in 2 standard lots, you're up $500, and you're like, yeah, dude, if this thing makes it to my target... I mean, you can see the target on the horizon, and at this point of the trade, say you're brilliant, you got in down here, it's up, and you buy into this going, man, this thing is going to here, and it does go to there, but at this point, and you even think that, I love this trade so much, I am going to run buy limits trailing, and I'm going to buy even more on pullbacks automatically, set it and forget it style. Now it comes back, and now you're down like $300. You were up 500, now you're down 300. You're like, holy shit! And I'm in so big now that if we start to crush to here, I will just be like I'll just be back to my original. I didn't make no money. So, do you dump the whole thing here and then come back and reload? But that would be more work, right? To come back to the structure, double top, pick up the bottom, and wait for that setup and then reload. But that's going to be always a problem. Should I just... Oh, because you're going to rebuy the spread too, and the commission's there if you're going to reload that whole position. But if you think it's going to... The fear of missing out is going to play into that. Are you going to... Oh, I'm just going to hold that because... But if you put in limits here, you don't have the fear of missing out. You kind of like, oh, I love this trade. And the balance here, if your total size is 200K and you don't want to trade any bigger than that, and you're already at 100K here, then you're going to maybe buy 50K here. Now you're kind of like, oh, I better move my stops up too. So if I don't get this thrust, but this would be it. And a lot of people are, I'm going to scale out of that, right? I'm not going to hold this whole position from here to here. I'm not going to do it. There's no guarantee we're going to get there. And it's a 4-hour chart, so let's not ignore any wicks here because they're really very big. And it's going to look like, if you're in really big, this pullback's going to matter. Right. Cashing out here is a great idea because this pullback is pretty substantial. Especially if you bought more here, so that you can't be too... I would even say this is an exit because look at that pullback right there. And that's an exit because of this. So I typically get out here. And then I probably, if I'm not in the market, it's time to start putting the sell limits in. So that's the balancing act. if I'm long here because of this, I'm probably out of that trade. Now I got to come back, put the limits back in. Otherwise, I'm just going to sit there and say, okay, I'm up in that trade. Let me buy more. I'm not in big enough. I only bought 10K down here. Fuck. I probably would just cash out. Now, this is the other thing. The market doesn't care how big you're in. And this is 12 hours of bullshit. Actually, this goes on for 2 days. From Friday to Monday. What a classic. Still got this price next week to deal with. This window. This window's been shredded already, though. See, this one's been played out, but we could retap. And these markets are really good at just blowing people's minds and coming down here. So I can see buying that and selling. I can say on a short-term basis, I'm selling into this on the pound. On the euro. Oh, we go to the euro here. Okay. So just going to go through the currencies here. Yeah, selling in this box above this wick. Right, cashing out on my longs above there. And doing a little short trade plan here. Kind of gentle market here, not that crazy. You could trade a lot bigger here. But then again, this is going to be premium buy zone. But that's, you don't have to trade like that, but I said you can still trade at the market. You can still trade on stops, all that stuff. And, you know, for the buy stop entry, I would trail buy stops if I had to. If somebody said, well, you can only trade buy stops. So I can see how I would do it here. It would look something like this. Okay, market's dropping. I'm not going to put a buy stop here, but on the small bars, yeah, buy stop here, buy stop here. Here's the trap under the floor. Here's the premium entry. So you got the, this is the, what currency is that? This Swiss franc, same story in the Swiss franc, same patterns here. And they, so the buy stop, I buy stop here as it's dropping, a buy stop here, buy stop, buy stop. Look at we're long, you know, buy stop, small bar, buy stop, trap, buy stop, because we have small bars and you're long. But just the same, I'm buying here on limits. Sure, I'm going to put a buy stop, not here, and cancel and replace every 4 hours. Rinse and repeat. Buy stop here, no buy stop here, even though that's a winning trade, kind of. It's too big a bar, right? You missed it. It's time to think about limits. Or just sell at the market because it's up. Sell at the market because it's up, because then you just made 40 pips eventually. So combining all three entry techniques, you know. Hey, you got confirmation, guys. Got buy stops pending here, you know. Okay, you got trapped here a little bit, and sell stops here, riding down a little bit. But you can also see the guy that has the buy limits is making the money. Sell limits, even here, sell limits, you make a little scalp there. So no buy stop here, but definitely buy stops on the small bars, right? Breakout trading works in a small bar. You're waiting for low. Even here, you're turtle trading it here, actually. Small breakout. Kind of the air's getting kind of thin up there, right? This is a mind-blowing move. But now we've reached that climax. We're going to just go into Foggyville. This is going to be the log jam to break coming into next week. Anyways, so that's that. I'm sure I could go on forever, but we'll end it here. Yeah, waiting for Sunday night here. And I think Bitcoin's had it. Put a fork in Bitcoin, sell all your Bitcoin. I would. If I was in Bitcoin, I'd be like, something bad's about to happen. Especially if you're falling up the stairs to get on an airplane. I don't know if that's a signal to sell Bitcoin, that if you fall 3 times up the stairs into an airplane, if you should ever have that happen to you,